Alright, guys, I am on. Okay, hold on 1 second, you guys. Actually, let me put some hype song here, you know.
One that I don't know about?
Sorry. Well, I'm hyped too. I haven't played my hype song in a while. Where's my hype song? Right here. Boom. The best song ever made. I love that song. Okay, 1 second, you guys. Let me go on my hold on, let me shut it off. There you go. And then try to put the comment up, you guys. So sorry, I do it this way because it's easier for me to see the comment and read it on the screen here, so that's why I do it this way. Okay, give me 1 minute. Okay, and then alright, there's a few people already. Hello, everybody. How is everybody doing today? Okay, let's go, you guys. Let's go. So what are we talking about today? I don't know. Let's see. I feel like we should focus a little bit on the overall economy, what's happening to the market at large. I don't know what's going to happen tomorrow, but you know, there's a lot of data coming And I don't know if I'm gonna go through all of today. But one in particular I want to focus on is the consumer. Consumption, consumer consumption in the consumer. Sorry, I'm just babbling here. Now, before I go on to that, let me go through the comments real quick. Wait, hold on. I feel like I'm all over the place here. I don't hear myself very well right now. Okay. Mic is on. Okay, I think I'm on right here. Alright, so, oh, you know why? Because perhaps my volume is not up. Okay, I think I'm okay. Alright. Well, hopefully you guys can hear me. Lynn, hello. It's been a while since I've tuned in. No worry. Thank you. You don't miss anything, maybe, if you don't, monitoring the price action, I'm just, I've been off for quite a bit as well. I just came back yesterday more consistently, and then I'm coming back today. So, not much to talk about. Of course, we have the exciting news of perhaps a new revenue streams that we're gonna be able to increase our profit margin to the company. As far as the price action, obviously it's been a whirlwind since the low of $10 or so. And so whether this is the bottom or not, we don't know. Do I care? Not really. Of course, always happy to see the price movement going up like this, but also to just be aware, there's a lot of market participants out there, different types. You have day traders, you have option traders, you have institutional buy-in, who knows, right? There's a lot of different ones. So yeah, thank you. Michael, Gamma. Gamestop. Now, I don't know Gamma RAM and all that stuff. I know that terms has been throwing around quite a bit. I'm sure the news gonna have their own spin on why the price has been coming up, going up and all that stuff. And we already see a few articles out there yesterday saying that there's no fundamentally based on this company. It's just memes mania, right? The same exact narrative. In 3 years, it's the same thing, right? They don't have any explanation why the company, or they don't want you to know the real reason why this company has been going up in price. So, this is why I want to focus on the fundamental of things, whether it is something to look into. I know I've been bullish about this company for a long time, been talking about this company in the ways that I think it's important, right, to focus on rather than what the news is telling you to focus on. Now, I'm not saying I'm a genius or anything like that. Maybe the news is right, maybe I'm right, but all I'm trying to ask you guys to do is just to come with your own conclusion, right, about this company, and also to be cautious as well on every aspect of this company. Now, let me see. This one in particular, they always want to steer it to there's no fundamental reason for that, right? And of course, we know that that is not true. If you're focusing on this one, you would understand that the company is actually improving fundamentally. Slowly, but surely, though. Yes, it doesn't catch up to the price action. It doesn't, in my opinion, this is just my opinion base here, is that it is undervalued, right? Current price value. How do I say so? Well, if you look at the book value for this company right now, it's around 4 something, right? It used to be 3, less than 3. So I'm sure because of the price action for this whole week, book value is now at $4. I mean, 4 times its book value. So my speculation or my own assessment on things, and it could be wrong, is that anything above 10 times its book value is overvalued for me, right? So currently, of course, this is a on the spot, in my opinion. But if you look at the other retailer as well, so let's look at the other retailers to see if you have this stock here, and then you have industry, and then you have specialty right here, specialty retailer. And so if you pick any one, right, currently GameStop is at 13 ranking based on the market cap, right? Now, we used to be below this particular company, RH. So now we're above that. Again, this is based on the market cap. I'm not saying that we're, income based. So in that sense, but let's just take that at face value for now. And we wanted to beat this particular company. So beat as in like perhaps we want to go to the extent of what this company could make, right? So currently $300 million, can we achieve that? I think we can eventually with the incremental change that we have been doing so far. In a couple of years, my hope is that next year we're going to be able to do $250 million. That's my hope for the trailing 12. Perhaps we could do that, perhaps we couldn't. Who knows? But as far as the revenue right here, you see the revenue for this company is only $2 billion. Okay? We have higher revenue than that, and people are still telling us, that we couldn't achieve that. All right, but again, for this particular company, it's two different company here, so but it's still a specialty, so it's still fair to kind of compare the two, right? It's still in the same category, retail, specialty, consumer, discretionary. And this is why I want to kind of focus a little bit on the consumer data a little bit here, just to stay a little bit informed about what's happening to the consumer. So as you know, consumer has been crushed for a little bit here. So perhaps the share price is going to kind of affected by the whole or I guess my point is that they might bring the price down eventually, just to tame the hype a little bit here, to say that, hey, consumer is not doing well, why is this company going higher and all that stuff. So yeah, I'm just trying to stay as informed as possible in the macro economy as well. Sorry, I'm kind of stuck. I feel like I'm having a stroke right now, so I'm sorry. Let me grab something to drink real quick. Sorry. Okay, let's go back to this particular company here. So I wanted to look into what is the book value for this company compared to GameStop here. See, book value is six times its book value. So if GameStop is right now, it's 4 times. So my thought process in that particular thing is that anytime you have 10 times book value is pretty steep for me, right? So book value. So my thought is that GameStop could 10x from here, its book value. And I would still be like, okay, yes, fair value, right? Again, this is just my own assessment here. Could be wrong, could be right. Who knows? But my thought also too is that if we could beat this company, if this company has the profit margin of, let's see, pretty steep. Look, profit margin of 16 right now. It would be a dream for us to hit that for profit margin of 16. Man, if we could hit that profit margin, we would be, billions of dollars a year here. 500 million. But of course, the gross margin for us is only right now 24. If you kind of compare that, right? So this is what we're trying to iron out, okay? and the fact that we're already kind of breaking even type thing right now at the moment. We're gearing up to, get more revenue on the other stuff. And this is why the trading card idea is very good. The DVD Blu-ray, as Michael saying here, is a very good idea to at least see. Sorry, hold on, my mom is on the phone. 1 second. Alright, I'm back. Sorry about that. I think that's why I was like, hey Lionel, what's up? Thank you for joining. Anyway, so my thought process is that if we are able to, get the 40%, I'm sure that's a bit steep for us to achieve right now at the moment in time, in 1 quarter, obviously, but in the nearest future, I'm hoping that we're going to be able to kind of bring in high profit margin items in order to increase this to at least 5%, right? That's the hope. Don't know if we're going to be able to do that, but I have no doubt that this leadership could probably get us to that. But at the current price point, obviously, right here, this is what I'm focusing on. Book value is pretty important for me to kind of trim off my position if possible. But at the current price, my logic is anything below 22, I'm gonna do the same buy order, the same consistent buys, right? The same amount of money every month. And then anything above 50, I'm just going to kind of wait a little bit until the price coming down again. Again, this is my long-term bag. As far as my trading, of course, I'm going to take advantage of the volatility that is ensuing based on my knowledge on selling call option. Selling cash secure put just to get that implied volatility. That's what I'm focusing on. Of course, I'm bullish about this company. That's why I do it this way, because again, there's so many strategy out there. If you're bullish on this company, that you will be able to accumulate the shares safely without going all in at the top and then having to wait. Of course, I learned that lesson because I buy this company at around 60, 30, 40, of course at the top, right? But I didn't sell. At $10, people are telling me, oh my God, it's gonna go to single digit, right? You're stupid for buying at this, at this level right here. But again, I was buying it little at a time because I knew, okay, there's a possibility that it's gonna come down, right? And so I add consistently down here as well, to the point where from here to here, right, I was for my old account again, and then my newer account, of course, my dollars cost average is a lot lower, and currently it's in the green for that particular long-term holding that I have for GameStop. So that's the strategy that I have, and so I implore everyone who's in this company to at least have your own strategy so that you could take advantage of this price action here. And on top of that, you have a long term, and so you take advantage of every single aspect of this company. Now, people would love to tell you, take profit as you go. There's no reason not to. If you are traders and, you could time the top, you could time the bottom and all that stuff. So be my guest. To me, I'm just, again, it's all about strategy here. Okay, so let's take a look at hold on, the data here. I have an indicator that I want to check real quick. I think short volumes stamper. Hopefully it's on. There we go. So I don't see it used to have this number here. Perhaps again something is happening that I am not aware of. So currently it's not registering what the short interest is. It's kind of curious to me why that is all of a sudden happening. But if you watch my live stream earlier, or like a couple weeks ago, this indicator is pretty like it has some number in it, right? So I don't know why it's not accounting for that. Perhaps it's the price action. It's just too much for them to calculate. Who knows? There's a whole bunch of reasons why there's so many discrepancy here. So I can't tell you why. So I was just curious about that one. Let's see. What was I looking at here? Let's look at the consumer thing. I think trading economic. I wanted to take a look at that one. Trading economic. I think this is the one. Yes. So, let's talk about consumer real quick, because core consumer price, this is a inflation, of course we've been kind of creeping up, back up again. Previous, this is the current one, right? So again, like even an ever so slight increase in prices, CPI and whatnot, it's still a painful thing for consumer, right? For us to have to bear the price increases, and on top of that, corporate profit, they have to increase their profit margin as well in order to make the company profitable or stay flat at the very least, but at all costs, right? What happens when they do that is that they have to lay people off and all that stuff in order to keep the company afloat. It's unfortunate that you have companies out there that have billions of dollars in profit. They still have to lay people off instead of using that billions of dollars in profit to put into the economy. What do? They do a stock buyback. This is what happens when you do a stock buyback. You don't really increase any value to the company whatsoever, or to the economy at large, at the very least. What you do, you just overinflate the company balance sheets. Artificial, it's just an artificial priced increase in order to enrich the executive shareholders and all that stuff, right? Now, what I'm hoping that this particular company, GameStop, my point of view is that they're doing something different here, right? Now changing the landscape of corporate America. I don't know why I'm going on about corporate America when I'm looking at CPI. What the hell? My point is that the consumer is crushing, right? People don't have money to spend. And so I don't know if it's going to get worse. I feel like it's going to be. You've heard of Starbucks doing terrible. You've heard, every consumer-based company is taking a hit. Even McDonald's, right? You've heard about how CEO of McDonald's coming online saying how consumer is being discriminated. Being stingy on what they're buying, and they're seeing a sign of that. So you better listen to those type of people, or at least be aware of what's happening at large. So my thought process for that is that if consumer is crushed based on inflation, then perhaps, our earning is going to be kind of at least following that, right? But thank goodness, you have a leadership that has been preparing for this 3 years ago, right? And why do I say so? Because we've been cutting down stores, doing the right thing when people are up in arms about expansion and, COVID money. The Fed's going to lower the rates. Of course, the Fed's going to cut the rates. And every step of the way, the Fed has not been doing that. And so that's the speculation that some of the company, like AMC, leadership has been doing. Because, if you listen to AMC, Adam Aron, 3 years ago when he had that $2 billion from shareholders raising money, what did they do? Oh, I'm ready to go on defense, right? The dumbest decision ever, because that decision gave rise to today's price point, or at least the value of the company or the value of shareholder hasn't been increasing from that stupid decision that he did by, playing offense when when he should have been playing defense like GameStop has been doing, right? For that 3 years, that decision was so important to just sit on cash. That's it. And what's happening right now? Shareholders is very, the company has not dilute shareholder whatsoever of all those 3 years. But the news would love you to think that Ryan Cohen is a failure for doing that because he's not doing anything. What are you talking about? If you understand what's the business cycle, what the debt cycle is, you wouldn't say shit like that. But the news is not there to inform you. The news is there to mislead you, okay? Again, just my opinion here, but if you see that and understand what the leadership is trying to do for this company, you would not be scared about the price action whatsoever. When it was $10, people were telling you it's a shitty company. Now it's $17. How about if the price point give rise to the company's value, where are those people telling people now? Say, okay, since it's used to be 10, now it's 17. Should they be buying more? Right? If you're the camp that always want to buy on the green, why not buy now? Why not having, a video saying this is the best company ever? At least twice as valuable as it used to be. No, of course not. But rather you have, video like this coming just one day ago, trying to rationalize why this price point is going up. But let's just listen in, and while I'm taking a water break over here. Okay.
In the realm of the stock market, few tales are as dramatic as the recent surge in GameStop's stock price. GameStop, once a darling of the retail video game industry, found itself riding the high-speed roller coaster of meme stock mania. But what exactly are meme stocks? They're shares of companies that gain popularity through social media hype rather than traditional business fundamentals. GameStop's journey through this volatile landscape has been nothing short of a spectacle. Recently, a surprising 17% increase in GameStop stock was observed following some rather savvy comments from Federal Reserve Chairman Jerome Powell. Amid speculation, Powell hinted at potential interest rate cuts, which often encourage investors to take on riskier assets.
That is untrue, by the way, and that was 2 meetings ago, I guess, when he's hinting at the rate cut. The most recent one, he hasn't. If anything, there's a possibility of a rate increase, okay? And higher for longer sentiment here. And so to say shit like this, again, misleading, right? If you're not following the whole economy, Jerome Powell's speech and all that stuff, people are just going to take that as a face value, and this is what they want you to think about this company. Now, just so you know, no matter what, Federal Reserve is doing, this company got it covered, right? So let's say they're increasing the rate, we have a marketable security for this company. So if the Fed raised the rate, we could take advantage of the rate hike by putting it in marketable security and just have the interest pay us. Just have the US government paying us interest in order to keep the company afloat, right? Now, that's beneficial for the company, number one. Number two, if the Federal Reserve lower the rate, as this particular person is telling you that they're hinting at doing, so let's say they're doing that, that means we have cheap money in order to, to do business much better, or expand or whatever at a cheaper price, because people would want to kind of deploy those capital, at a whatever rate in order to make, the percentage off of it. And so that's why traditionally when the Federal Reserve lower the rates, depends on how steep, those decreases, right? People probably speculating at least 7 rate cuts, which is like 3% or something like that. So that would be crazy, right? It just again ensue a panic of like, hey, something is happening. So when the Federal Reserve lower the rate, usually it takes quite a bit of time to take effects in the economy. So you might not want to be overzealous at buying those high risk stock, right? It's just going to be a short-lived, if that is the case, that the price action of any other stock that are quote-unquote high risk. Of course, they want you to believe that the GME is high risk, which, with the status of it being shorted like crazy, I wouldn't say I tend to kind of agree with the price action. But as far as the company goes, okay, this is why it's so important to know the difference between the price action of the company and the actual company itself. Okay, so high risk, yes, because of the price action, but it's a safe company to be in because of the actual fundamental of the company, what the company has been achieving lately, what they've been doing this past 3 years to prepare for this particular time that we're in right now. And again, if you don't understand what leadership has been doing for the last 3 years in order to make this company solid in a fundamental level, you would not understand what these people are telling you to do. Or you would not have anything to say differently about this stock other than it's a meme stock. Right? There's a reason why they want you to think that. There's a term for that, right? It's called character assassination or guilty by association. And this is a psychological thing that they're doing to people. Just like, again, the fact that peg it to AMC too, right? AMC, GME is the same thing. Now they're trying to bring in Bed Bath & Beyond, right? Bill Pulte has been on TV, Fox News or whatever, to try to get people to think the same way. They're ready to kind of quote unquote pump Bed Bath & Beyond, or at least distract people to think about Bed Bath & Beyond. GME 2.0 type thing. Again, this has been done before 3 years ago, luring people to put money in every other stock except the stock that matters most, right? In my opinion, obviously, hey, do your own research. But these type of things, I feel like I have an eye for, right? To kind of sort out the bullshit they're telling you, because I've been following it myself, right? So to say that the reason price action comes at the heels of Jerome Powell's speech saying that he's hinting on the fact that he's gonna lower the rates, that's BS. That's BS, because he hadn't say that. If you just listen to the most recent one, he had not say that. So just be aware of that.
GameStop, positioned at the high-risk end of the spectrum, saw a significant uptick as a result. This surge is a reminder of the unpredictable nature of meme stocks, where investor sentiment can often overshadow fundamental valuations. GameStop sits precariously at the peak of the risk curve, making its recent price surge a spectacle of high stakes. Rewind a few years, and GameStop was at the center of a meme stock frenzy. Today, the reality is starkly different. In the aftermath of the meme stock explosion, GameStop has faced a steep downhill journey. The fourth quarter of 2023 painted a grim picture of the company's financial health.
A grim picture of financial health. Of course, they're gonna focus on this, right? We'll see. Is it really grims when the company's actually net positive? Really? Really? Who wrote this script?
GameStop's shares tumbled by 18% following the release of these results.
See, they only focus on the price action, and this is why they're trying to get you to sell. And this is the psychological things that they're trying to do, right? What would scare people most after earnings that are profitable earning, mind you, okay? They're profitable, but yet they're doing this, right? So the dynamic is that because they did that, people were like, we're not fooled. Really? Are you kidding me? You want me to buy GameStop at $10 rather than $15? Okay, let's do that. And of course, they've been doing that for a couple of weeks. And then now, this is the payback, right? Because again, you can't fool people. You can't. Well, you can't fool people who've been in this company, following the company, and learning to read the balance sheet yourself. So this is lies, right? All lies. Hype on the other end, right? Like they call it poop and scooping. They're pooping and scooping this company right now. And whoever believes in this particular video is going to miss out.
Indicator of the challenges it continues to face in a rapidly evolving retail landscape. During this quarter, the company reported earnings of only 22 cents per share, falling.
Okay, so a grim, right? Let's look at the terminology. There's that, falling at the heels of the Grimm's result. But yet, company only make 22 cents. So if it's a Grimm's, why are they making money? What the fuck? You see it's called a frame of reference, right? They want to frame it as if like GME used to earn so much money. Now they only earn 22 cents, right? If that's the case, again, you would see it on the balance sheets, right? They used to actually lose money. Now they make money. Okay? And to the tune of 22 cents per share. Okay? And this is what they want you to kind of flip. It's like as if GME used to make billions of dollars, but now they only make less. Again, misleading, right? To try to mislead people. Newcomer who doesn't know anything about the actual balance sheet of the company, and then also to kind of paint it as if it's just a meme stock. It's just people who doesn't know anything, dumb money buying up the stock price with actual no fundamental whatsoever. BS. This is a fundamental play. This is a successful turnaround play that they don't want you to take advantage of, right?
Short of Wall Street's expectations. This miss was significant, as analysts had pinned higher hopes on the company, expecting it to capitalize on the nostalgia and community support that had previously buoyed its stock. A critical factor in GameStop's decline has been the shift towards digital game downloads, a trend that is reshaping the entire gaming industry.
Oh my God, look at it. Just the photographic picture of this particular, the video that they're showing you is like, oh my God, it's struggling.
As more consumers download games directly to their consoles, the need for physical stores and even physical game discs diminishes. This shift has severely impacted GameStop's hardware and software sales, with hardware and accessories sales dropping by 12% and software plummeting by 31%. The retail giant's woes are compounded by aggressive competition from other companies that have successfully transitioned to digital models. Major players like Microsoft, Sony, and Nintendo have embraced this digital
We're actually partners with all of these. Nintendo, obviously, we're actually partners with those. So just so you know, yes, the digital aspect of it has been addressed already. Now, I know it's a challenging things to do, right? But now we have new revenue stream to talk about, right? Which is the collectible aspect of it. You could do antique, you could do whatever. Well, I don't know if that's a route that we're gonna go in, but at least it's something, right? Whether they're gonna increase just by 1% of profit margin, that's also immense as well. So we'll see how it will play out. But yes, just to point out, we're actually partners with these companies. Okay, so let's take a look at it real quick. We do have partnership. Where do I go to see that? But hold on. Oh, digital store. I'm like, where the hell is this? So yeah, we have digital download as well, and if you do, you get 5% deduction off of your games, right? Does anyone do that for you? Of course not. Right? But also, you could download it from EA, you could download it from everywhere, So, see, Xbox, Nintendo. Who's doing Xbox? I think it's Sony. No? Am I wrong? No. Microsoft. I think it's Microsoft. Yeah. But anyway, so yeah, we have partnerships with this company, and to say it's somehow, those companies successful. So if we're partnered with this company, I'm sure we're gonna be fine, right? Whatever shift that they're doing. But yeah, this is the thesis that these people have been touting. 3 years already, they haven't changed a bit. They have not. They couldn't. Why should they? If they flip positive, they won't have anything, because they've been shorting this company for a long time.
shift, further marginalizing traditional retail outlets like GameStop. This decline in sales is not just a reflection of changing consumer preferences, but also highlights GameStop's struggle to pivot effectively to an online model. The company's efforts to revamp its online presence have not been enough to offset the steep decline in physical store sales.
That's not true, because if that's true, then they would not have been able to flip profitable last quarter and trailing 12. So the shift is successful. The transition has been complete. Now what we're going to do is growth stage. Okay, we're ready to grow right now. How slow, how fast, we'll just have to see. But the transition has been complete. And evidence is this. Boom. Okay? That's a completed transition. Currently, we are clean slate. Okay? Ground zero over here. Okay? So there's no more disastrous things that's happening to the company. So the looming threat of bankruptcy is not here anymore. Okay? Because we've been doing the best that we can to survive the current situation that we have in the market, in the consumer. The fact that we're able to do that, that's already a successful turnaround already. So, of course, they want you to still stuck in 3 years ago time mindset about this company, okay? And this is how they mislead you, okay? I'm sure this is the best time to buy into the company. accumulate the shares, and as cheap as it is today at 4 times its book value, when other companies that doing less revenue are trading at 6 times its book value. So technically, this company could run 40% more and it's still valuable. Or it's still at least, along the line of what, if you only use that metric, right? But of course, so remain to be seen. I'm curious about the first quarter. So first quarter, that's what we have an eye for. If we post any type of positive or just losing a couple $1 million a quarter we're going to be off to the race. But as far as the price action, it's going to do what it does. It's going to fluctuate based on how many people would be, writing call option, put options, buying stocks in order to hedge, and all that stuff. So just be aware.
With a significant downturn in sales, GameStop's struggle to adapt to an increasingly digital market becomes evident. The once celebrated meme stock now faces the stark reality of an industry that has moved on without it, leaving it scrambling to find its place in the new digital era. This stark contrast from its days of stock market glory underlines the volatile nature of meme stocks and the rapid pace of change in the gaming industry. In a bid to navigate through turbulent financial waters, GameStop initiated several cost-cutting measures. As the final quarter of 2023 unfolded, the company found itself grappling with a significant downturn in revenue, dropping from $2.2 billion to $1.7 billion. This substantial decrease compelled GameStop to reevaluate its operational expenses and workforce. The layoffs were perhaps the most poignant indicator of GameStop's struggles.
The most poignant? Well, how many workforce did they cut recently? Not that many. It was like less than 1% maybe, because they've been cutting consistently. The storefronts and all that stuff, the number of stores significantly lower than it used to. But yeah, to say that it's the most poignant struggle and all that stuff, again, it's just hype to the nth degree when other company has been laying off like crazy as well. And this is the nature of doing business in this environment. If you haven't heard about all of the layoffs with other company, you would be crazy, but if you notice this particular point right here, anytime other company is cutting job, what happened to the stock price? It goes up. Because that's usually the indicator that at least, okay, the company will survive for a long term. But when GameStop does it, the price coming down. You have to understand that dynamic as well. And if you understand it, you'll be like, oh, okay, of course, it's just, to scare people away from the company, that you should be owning, because the company is doing well, right? The company is recalibrating in order to survive this long and thrive later on. They're not just going to tread water here. Of course, we need to survive the storm first before we could even thrive later on. So if you're doing stupid things like Adam Aaron 3 years ago, having $2 billion, he was jumping up and down doing something crazy. That's why you're treading water right now, and you're not going to survive within 10 years, within the downturns, because the downturn hasn't been felt yet by the stock market. And so when the stock market crash, quote unquote, GameStop's going to have the ability to take advantage of the crash, right? Because of the cash on hand that they have, right? And so this is the opportunity. You don't spend money, they didn't spend money 3 years ago to do anything, and people were like ups in arms about how, Ryan Cohen hasn't done anything. Well, sitting on cash is doing something for the future. Capiche? And so, again, That's a smart thing to do. And to say that, somehow companies cost cutting in order to stay afloat is a bad thing. Of course, it's bad for the employee. Yes, it's bad for people working there. But this is the nature of business, right?
While reducing the number of employees can lead to immediate financial relief, it also poses substantial risks. With fewer hands on deck, the remaining staff faces increased pressures, and the company risks a decline in service quality and operational efficiency. Furthermore,
I wonder if they said that about Apple. Laying off people, Microsoft, a whole bunch of high-tech company out there. And, of course, again, they're always going to spin it the wrong way, or the most negative way possible, right? And so just be careful about this type of sentiment and or this type of article, video, and all that stuff to try to steer you to do something. It's a call of action to do something, and it seems like they want you to believe that GameStop is dire, right? It's in a dire straits situation here, that if you buy into this company, you're going to lose your money in some way. So be aware and be vigilant. I know this is a long, drawn-out reaction here, but I'm kind of having fun right now.
GameStop's decision to cut costs wasn't just about reducing headcount. It extended to scaling back on inventory and minimizing other operational costs. These measures were taken in a landscape where digital downloads are increasingly overshadowing physical game sales, a shift that has notably impacted GameStop's bottom line. The challenge here lies in the delicate balance between reducing costs and maintaining the ability to innovate and grow. Reduced investment in key areas such as customer service and product diversification could hamper GameStop's ability to adapt to new market realities. This is particularly critical in an industry that is rapidly shifting towards digital and cloud-based solutions. While necessary, these cost reductions raise questions about GameStop's ability to innovate and compete in a rapidly evolving industry. The video game industry does not pause for anyone, and GameStop's competitors are moving fast. In a world increasingly dominated by digital downloads, companies like Microsoft, Sony, and Nintendo have been quick to adapt, leaving
Now, mind you, these companies that they're mentioning, like I said, they're not competitor. They're partnerships with GameStop. Okay, we're selling their product here. Okay, we're not competing with Nintendo. We're not competing with no. We're competing with retailers. Okay, like what is it called? Because we're not a software company. We're a retailer company. Okay, like we're not making our own games in order to compete. Or, we're not making our own console in order to compete with, Sony. No, we're not hardware company. We're retailer, meaning from corporation to retail. I forgot what it is. What is the forget it. I'm thinking, what the hell? So we're not competing with these companies, and it seems like this article or this particular video is trying to convince you somehow GameStop is competing with Sony, right? Competing with whatever. It's stupid. We're competing with Best Buy. We're competing with other retailers out there who has game industry, but it seems like they're not even doing anything with the physical right now. So we're the only stores that are taking the physical right now in the market. That's why we're doing Blu-ray right now as a movie based, and kind of take on that refurbished type of renewal of the physical aspect of it. And so we'll see who's going to win out. I'm sure there's a market for that. And now we're doing the trading card of the Pokemon trading card. So there's also that collectible angle of things. So we're going to ramp up that collectible portion of our sale or revenue. And we'll see how much we could be increasing that a portion of the revenue. So it's not just the software. Of course, software is going to be a challenge for us. As they said, physical to digital type thing. But we have it covered as well. We do have those ability for people to download their game. If you want to download digital, there you go. You have it. You have that ability. Why would you go to GameStop? Well, because you get these perks right here. Okay, 5% off of your game. So that's why. I mean, what is that? So they've been shifting to that particular thing as well. I know there's a lot of bears out there. Hi Carter, thank you. Happy more. I have to run, but I'm. Oh, thank you. I appreciate you. You're not missing anything. Of course, you've been, making videos about GameStop as well. I appreciate your support, though. Yeah, there are a lot more eyes on this company now, on the fundamental level. And I'm sure, eventually these institutions would have to buy in because we're a profitable company. We're making more and more money. We're making stride in this particular environment. That's nothing to scoff at all. Okay? Coming from losing $300 million to now making $6 million. Nothing to scoff at. Do not let these people telling you otherwise. That somehow this company is not doing anything to grow, to take advantage of the situation here. They are. It's slow turning. It's slowly but surely type thing. So, people usually overestimate what this company could do in 2 years, 3 years, short term, right? But underestimate what they could do in 10, 15, 20 years. And time again, if you use that principle, with any asset that you're seeing ballooning, including Apple, including Meta, including every other companies out there that used to be in a small cap company that are, turning around. Apple, famously, used to struggle at some point in the company history, right? Now they are taking large market shares. And so, similarly, GameStop's going to be able to do that because they have cash position to do it. They have cash to do it, you guys. Currently, just like I'm saying, there's no opportunity yet. And who agree with that sentiment? Well, after this video, I'll show you who agrees. So,
Traditional retail models, like that of GameStop, struggling to keep pace. Microsoft and Sony, two titans of the industry, have aggressively expanded their digital ecosystems. The Xbox Game Pass and PlayStation Now services offer vast libraries of games available for instant download, appealing to...
Yeah, so who sell those Game Pass, you think? Don't we sell Game Pass here too? No? I'm sure you could buy Game Pass here and join Game Pro. There you go. Virtual Bug. Ease. There you go. You could buy all those game stuff. Okay. Fortnite. V-Buck. There you go. You buy it from here. And why would you want to buy it from here? Well, you could take advantage of the 5% off. Okay? There you go. That's value created. And so to say that somehow GameStop is competing with this company, that's not true.
To a generation that values immediacy and convenience. This shift...
We're selling PlayStation console. So, it's ridiculous.
...has not only increased their user engagement, but also allowed them to sidestep the physical limitations of retail space and inventory management. Nintendo, while initially slower to embrace full digital distribution, has made significant strides with the launch of its online store and expansion of digital offerings on the Nintendo Switch. The convenience of downloading a game directly to a console is a powerful draw for consumers, particularly when it eliminates the need to swap cartridges or discs. Leadership can often be the linchpin in a company's turnaround story. At GameStop, CEO Ryan Cohen has a vision. Ryan Cohen, stepping into the role with a background rich in e-commerce from his days at Chewy, envisions a GameStop that leans heavily into the digital age. His strategy? To pivot part of the company's focus towards cryptocurrencies and blockchain-related stocks.
That's not true. Of course, it's not. No, that's not true. So, let me just leave it at that.
This move, while bold, aligns with Cohen's history of embracing tech-driven solutions. But the question on many minds is this the right move for GameStop? The allure of blockchain is undeniable. It promises transparency, security, and a level of engagement that traditional retail models can struggle to match. By venturing into this space, GameStop could potentially tap into new revenue streams and rejuvenate its brand, aligning itself with the tech-forward preferences of its core demographic. However, this shift is not without its perils. Cryptocurrencies and blockchain technologies are notoriously volatile and fraught with regulatory scrutiny. For a company like GameStop, already reeling from significant financial losses and a declining market position, this move could be...
We did not lose much on that at all. And we're still in developing, of that particular sector. But we're kind of slowing it down. Right now, we're just ramping up the physical stores and ramping up the e-commerce, ramping up the retail-based company, right? So all of this balance sheet here was due to all of the goodness that you see in the balance sheet is due to that pivot, successful pivot to the company. Balance sheets. I know balance sheet is a buzzword for some people around here, but no, it's not. If you look at that and you still doubt that somehow this company is in apparel, I think you're in a world of hurt here.
Perceived as a high-stakes gamble. Furthermore, the success of such a transformation largely depends on market reception and the ability to effectively integrate these technologies into GameStop's existing operations. The integration process itself could divert focus and resources from other critical areas of the business. Investor confidence may waver as GameStop ventures into the highly speculative and volatile realm of cryptocurrency. As we've journeyed through the highs and lows of GameStop's recent history, one thing remains clear: uncertainty prevails. In the wake of a digital revolution, this stalwart of the retail gaming industry finds itself at a precarious juncture. The shift from physical to digital media has not only reshaped consumer behavior, but has also severely undercut GameStop's traditional revenue streams. The narrative of GameStop's struggle is deeply entwined with the broader industry's pivot towards digital downloads and streaming services. Giants like Microsoft, Sony, and Nintendo have embraced this new era, leaving GameStop grappling with a dwindling market share. The stark 50% drop in software sales is a telling sign of the changing tides. Financially, the picture remains grim. The recent quarters have seen a significant decline in revenue, with the last quarter of 2023 alone witnessing a downturn from $2.2 billion to $1.7 billion. This decline is a direct reflection of reduced foot traffic and sales, a trend exacerbated by the growing preference for online game purchases. On the strategic front, GameStop has made some decisive moves under the leadership of Ryan Cohen. The focus has shifted towards cost-cutting measures and exploring new avenues like cryptocurrency and blockchain-related stocks. However,
so again, this was 3 years ago, and now they're trying to let you know that this is what, we're currently facing right now. No, we're not currently facing those things anymore. We already addressed it already. Currently, we're actually in the phase of growth, okay? Now, why do I say that? Well, we're focusing on adding new revenue streams right now, right? Which is, that's why that pivot, not pivot, but adding more items to sell to the bucket. And so again, this trading card things is a good move right now at the moment, because there's obviously a market for it. How profitable it is, we don't know until, quarter two, quarter two, because the trading card right now just got announced. So now when I say trading card, the Pokemon Rare, buying, sell it, and then the DVD movie, all that stuff too, is going to be on quarter two. Quarter one is ended like back in April, right? End of April. So that is already end. So anything that you're buying today onward is going to be on quarter two result. So we don't know how profitable the Pokemon thing is going to be until quarter two. So just it's a good thing here that this type of video is coming up. Just again a clue to me that GameStop is actually doing pretty well right now. They just don't want you to buy it at this moment in time, because they want you to miss out on the run first. They want you to buy GameStop at $100, $60, $40, $50, right? They don't want you to buy it at what right now, $17, $10. No, of course. Why would you want everybody to own this company at $10 right now? To them, they want to mislead you into saying, hey, if you don't sell here, you're never going to get your money back. If you don't sell here, right here, you're never going to get your money back. And all the time that you've been accumulating, people have been holding this company for a long term. We're already, starting the position here and looking to profit off of this run here, right? Again, you need to have your own strategy when you come to this particular stock. Yes, that video has a point there. There's a volatility here that you need to understand first, and then there's also an angle of the actual company, what they're doing currently. So that's why keep an eye on it. Have your strategy, when to buy, when to sell, when to whatever. At what point of price, at what price point are you willing to buy more, and be okay and wait for the next earnings report, the next move that the company is gonna be doing moving forward. Okay. Of course, it's going to be at the whims of what the current balance sheet could tell us for now at the moment, until Ryan Cohen's going to deploy that cash on hand onto whatever investment that he thinks is going to give him that opportunity. Now, this is a good segue to what I was going to tell you about cash on hand, how important it is to have cash on hand when you think that there's no opportunity right now. Okay? Sitting on this massive amount of cash is important. And who else agree? Well, let's listen in.
How did Mr. Buffett strike you? It was a weekend of some sentimentality, maybe some melancholy, as Charlie Munger, his longtime compatriot, was remembered. How did Mr. Buffett strike you?
Well, he has been such a generous and brilliant and wise man in my life that there's hardly anything he can do that disappoints me. He's 93 years old. He just had his closest friend and his closest business confidant pass, and he's feeling the effects of that. And Charlie, they started the meeting out with a bunch of Charlie witticisms of the past years, and you couldn't help but be emotional about it. It's really the end of an era.
It was clear in some of the sort of subtext that Greg Abel is assuming a more important role internally. He's the designated successor. Did you feel that way?
Mm-hmm. Oh, yeah. He will be the CEO of Berkshire Hathaway, the primary asset allocator among buying whole companies versus putting more toward stocks, et cetera, which was kind of a surprise to us. We thought the last 10 years or so would be a process of turning more of the reins in company selection to Todd Combs and Ted Weschler, and that explains why they haven't been given a more prominent position at the annual meeting. We wondered about that the last 3 or 4 years, and we got that question answered for us. But it will be a different company. It's a wonderful, large conglomerate that is closely tied to the United States economy. And if you want a wonderful company closely tied to the United States economy, it'll be a good investment for you the next 10 years.
And of course, we should not even suggest that Mr. Buffett is anywhere close to finished yet. He is an amazing leader, amazing stamina, and of course is still fully in charge of it. So let's talk about their big cash pile, $180-some billion, heading to $200 billion. What should they do with it? There is some discussion. Would you, as a shareholder, like to see them pay a dividend? Or would you like to see them make a big acquisition? Or would you like to see them buy back shares?
We have no interest in the dividend. It's fine to have them buy back shares, but you always have to think about Berkshire Hathaway, do as I do, not as I say. Because Warren Buffett is a super nice guy, and he has absolutely no interest in offending people. But if you look at what he's doing, he is as bearish as he ever gets. I read right between the lines, right from the beginning at the meeting on Saturday. I was there sitting in the audience, and I thought, okay, huge cash position, trimmed his Apple position. He's nibbling on something below the surface they haven't announced yet. But basically, he is waiting until the next 40% decline in the stock market to apply massive amounts of capital at bargain prices in things that are large enough to be meaningful to this company at the size it is now.
So you just used the phrase, this is as bearish, I believe you said, as I have ever seen him.
So, what do you think Ryan Cohen is waiting for? Huh? Of course, this particular network would love GameStop to use that cash to do something, right? But when it comes to the most share, I'm sure they own this company, own a massive position on Berkshire Hathaway. This is why they have this sentiment right here. Now, this is the correct sentiment to have, and for any company at all, right, who trying to emulate this type of emulate Warren Buffett, the greatest investor in the whole world right now, obviously, right? He has that status for a reason. And so there you go. It's no difference there in a sense, right? Of course, Ryan Cohen is a lot younger, and he's going to use technology to his advantage as well. It's famously, the largest shareholder of Apple stock in the world, individually, obviously. So, I'm sure Ryan Cohen is aware of what Warren Buffett is doing as well. And to emulate that, I'm not sure he's going to emulate him, to the T or anything like that. But GameStop has that ability now. And this is what people don't really want you, or these people, I'm talking about the news media, don't want you to even explore that idea or have that thought, that seed in your mind that, hey, GameStop is able to invest that cash on hand on any other company that they wanted to. Currently, just like Warren Buffett is seemingly, do as I do, not as I say type thing. His action is telling you that he's increasing his cash position even more so now. So there you go. And the whole point for that is to wait for that 40% crash in the stock market. So when that crash happens, GameStop could take advantage of that. Warren Buffett's going to take advantage of that as well. And so, and that's the only way that he could move the needle, quote unquote, on Berkshire Hathaway, because they are massive, right? There's no reason for them to be shy about how, okay, at least moving the needle of that massive position on Berkshire Hathaway is going to be that cash position is going to give them that opportunity, right? I think even more so for GameStop, because GameStop is a small cap company here. That move, 40% down is going to give the company, I'm not talking about the stock price here, I'm talking about the company itself, massive advantage in the nearest future. So yeah, it's remained to be seen, but let's finish this segment here.
Is that really the right characterization, or is it rather that he thinks the market is too highly priced for him to go in a big way and put fresh capital to work? In other words, is it so much a bearish call as it is a rejection of the idea that this is an opportunistic time to invest?
Tyler, you have asked a great question. So I'm going to answer this in kind of an odd way. In 1969, he pivoted from being primarily a quantitative Ben Graham value guy to being more of a Charlie Munger qualitative guy, right? Get a reasonable price on a great company. And he said back in 67, 68, 69 that the quantitative ideas that he used to like to buy were combed and recombed. That was his letter to partners. And this last year, he said that the kind of things that we would like to do have been endlessly picked over. So that is code for, we think the market's expensive, we're not in any hurry, we're going to wait. And remember, he's talked constantly for 10 to 15 years that the bigger Berkshire gets, the more it limits their opportunities.
Right.
So really, to have very large opportunities for large deployments of that $200 billion, you've got to have the entire market get into very difficult circumstances.
There we go. So again, like that cash position is massively opportunity awaits. Okay, so we just have to wait on what the decision to deploy that capital is. And so since Warren Buffett's going to increase the capital, what do you think next quarter for first quarter is going to be? We're perhaps going to increase the capital for holdings, meaning like cash on hand. Okay, I'm sure, if we're able to kind of stay flat, I'm sure we're gonna still be at around the same cash position that we're in. And on top of that, if the Federal Reserve is gonna keep the rate at this high price, I'm sure he's gonna increase the marketable security even further, just like how he was doing it at, hold on, let me see. This is first quarter, right? First quarter. No, this one right here. So, okay, this is a year ago. Wait, how am I? That's curious. So this is annually. Last year, this is fiscal annual. Last year we were at 25, so we have to wait another year to do this. But that's why trailing 12 is better at looking at the trailing, the trend. So the trend is up. So perhaps we're going to be able to do, $300 million next one. Or a little bit more, right? In order to capture some of that interest again, first quarter, to cover for some expenses that might come about, right? And so we're doing it slowly, surely, methodically, cautiously, because of the whole market. If Warren Buffett thinks it's going to be overvalued and increase his cash position, then the sentiment should be the same. Now, I'm not saying tomorrow the market's going to crash or anything like that, but the short term, 6 months to 12 months, I'm sure that's what he's waiting for. He's not in the business of timing the market here, okay? Warren Buffett has been sitting on this cash position for a long time. I think 3 years or something like that. I mean, not to this extent, but if you listen to him, back in a year ago, he was still in this cash position here, and so, but he's still waiting. He's still waiting for that opportunity, like the guy's saying. 40% drop, of the stock market, or even 20% drop, you still have that opportunity as well. So there's people been speculating why, but yeah. But for some reason, if Gamestop holding a massive cash position, people would be like, this guy's not doing anything. Ryan Cohen is a terrible CEO because he's not doing anything with the company. He's just putting it in a marketable security. What kind of growth is that? It's like, are you 5? Of course, again, they're doing that to try to mislead you to think that it's actually a terrible thing to do when it is not in this current environment. So, yeah, and of course, Ryan Cohen famously was tweeting about having thumb war with Warren Buffett at one point in his tweet, right? So, again, he's aware. He's the greatest investor himself as well. So he knows what to do. To have this type of CEO, it's unheard of. So I'm going to end it right here. So before I go on and on about how great Ryan Cohen is, I'm a big fan, so I don't want to muddle my analysis on the actual company itself. So, but if you want to kind of take a look at it, I implore you to look at the balance sheet yourself. Don't listen to, the snippets of people telling you what the company is doing. But yeah, the price point is going to do some great things. I don't know what's gonna ensue this whole week here, but you have a lot of option traders here, right? So let's take a look at the institutional ownership. Now, I haven't seen any increase yet as of late, but it's just a couple percentage here and there. BlackRock added more recently in March, and Vanguard kind of trimmed some more of position in GameStop. Not much, of course, right? A small little trimming here. I don't know. Again, this is the sentiment here. Of course, State Street's right here increased their position last December by 3% right there. So, yeah, not much there. Not much. Hold on one second. Okay, so it seems like they have Charles Schwab. I can't even say. Charles Schwab increased their position recently here, 24 of March. Okay, 7% right there. Some people decreased their position by 5%, but again, if you look at the number of shares, it's different. So just be aware of that too. It's like when you see this type of percentage right there, right? They increase by thousands of percent because they've been buying like 1.6 million shares there. For DC, Shar, and Co., I don't know all of these particular funds, whether they're associated with private equity or not. Principal Finance Group right here. It seems like they've been kind of increased their position here. Again, it's only in relative to what they already have. So just keep that in mind when you see all this percentage, like thousands of percentage. It just means that they have not had the company. So, and so the current share volume is the one that you should be focusing on rather than the percentage. What is this? I don't even know what this particular one, but they add 10%, which is only 140,000 shares there currently. I wish I could do the current date here. I don't know why they don't sort it that way. That would be a better assessment on things. You see that? So it's 2003. There you go. So, but yeah, there's a lot of people trimming their position down, up and down. Again, these are institution. So, right, up and down. That's just the nature of market. Some people think that the company is overvalued. Some people adding position because they think it's going to go higher. So currently, increase in position is 6 million shares overall increase for institution ownership. So decreased their position by half of the shares there, held positions. So they still, if you do the overall institutional ownership right there, you see that it's creeping back up again. It used to be 27% or so. Now it's 29%. It's good to see, right? But what I was curious about too is AMC. Surprisingly, I know as a company, it's a terrible company to own, in my opinion, but it seems like the institutional ownership has been increasing a lot too. So let me look at it real quick. I don't know why I'm not able to. Oh, I hate this. Let's see. I think I did that. Give me a minute here. Sorry, you guys, I'm dragging on you. Okay, there we go. So, institutional ownership, I mean, still low, obviously, but it seems like increase in share counts. Recently, right? 40 million shares. So they're probably ready for something, right? So Vanguard, again, they're probably just buying it to lend it out. But recently they've been increasing their position by 4.6 million shares. And then BlackRock, 1 million shares of GME. DE Shar, even more than Vanguard. Again, they might know something, right? Now, this is last year, but if you look at the current, it's like currently, like people have been trimming down as well. So this is the current one, Susquehanna, right? They're probably looking for that run. Now, I don't know if it's going to be MOAS here. It's probably like 20% and then they're going to trim it out. So just be aware of that as well. JP Morgan's up currently, pretty recent there. Close to 1 million shares more. So again, I don't know. So maybe they're planning to run it up more percentage than GameStop. That's also a possibility as well, to kind of damper the reputation of GameStop as well. So yeah, do what you want on this. I know there's a lot of people gonna think about how this company is gonna run the same. Perhaps they're gonna pull the wool over people's eyes again that GameStop is a terrible company. Look, AMC runs the same way. They have no fundamental value, whatever, right? Again, the same narrative, right? But if you invest in this company, you know that this company has been doing pretty well. And I'm hoping that's what I'm babbling on about. And if you are here for this long, I appreciate all of you. I know, Guy Rosen, there is a way to count total share vote against proposal 4. How many percentage voted? They can assume the share. Okay, we can assume the share quantity. Not quite sure. I mean, I did vote on the proposal already. Whether the share count's gonna elicit anything, I don't know. I mean, I feel like the DRS and the fact that we have a whole bunch of insider ownership, those percentages already been calculated. And if you think that retail only owns about 20%, what is it? The DRS people owns about 20%. Closest, right? 20%? Was it like, right? 75 million shares owned by a small group of people of 200,000 people. Close. Alright, so on average, people only own this many shares. So do you think of the 3 years that we've been accumulating, you think on average retail owns only this amount of shares? Of course, you could speculate. That would be my speculation, is that we own more than that on average, right? And there are more than 200,000 people owning this share of GameStop. There you go. You said 25? Yeah, 25%. There you go. And so if that's the case, we're off. Like we're owning the float already. Like again, this is my own speculation. Okay, I'm not saying, I don't know how many people are actually owning the stock itself. They're probably just owning call options, right? And so that exists as well. So owning the call option, it just means that you have the ability to exercise or own a share at a certain strike price. Depends on what strike price you pick. If you're in the money, meaning that the strike price is going to be lower than the actual traded share. So that's just the semantic here. Yeah. Be prepared for Monday. I'm having a high hope here for the company to do well. In terms of stock price, just be careful. If you want to buy in, just be careful of, at what level you're willing to buy more at. Again, I have my price target here, which is 22. Anything lower than 22, I'm willing to buy at the same rate that I've been buying. And anything above 50, right here, I'm going to stop the rate of buying. Anything in between here, I'm going to slower the amount of shares that I've been buying. So, again, just to, so that I don't have a heart attack about the price action. That's my long term. And as far as trading goes, yes, I have that trading account as well. So I'm taking advantage of the implied volatility being high. All right, that's all I have for today. Babbling on and on. God bless you if you've been in here for a long time.